beyond NVIDIA. Thank you, Claire. Many investors are wondering if we're in a broader market bubble. I would go further than that. Most people accept that we are in some sort of bubble or balloon. So then the question is, when is it going to burst or have the air come out of it? Now, the market is facing several threats, most notably, of course, the AI and sky-high valuations. And, of course, you've got the question of, as those valuations come down or as there are worries, so the air comes out the balloon. Then you've got the minutes from the last Fed meeting. They showed many members leaning against lowering interest rates. That is a slow, along with the lack of economic data that is clouding the issue. The Bureau of Labour Statistics now says there will be no October jobs report because no data was collected during the government shutdown. I spoke to the ARK Investor CEO, Cathie Wood, about this very subject. We're all in Riyadh, as you know. She said she expects real productivity growth in the coming years.
This is the opposite of the tech and telecom bubble. That's why this is sustainable. This is the proverbial wall of worry. Those are the strongest bull markets. They climb a wall of worry and they broaden out over time. And that's what's happening now.
Now, with me is Ken Fisher, the founder and executive chair of Fisher Investments. You can't see Ken, but I'm letting the air out of the balloon very gently. But the fear is, because I have here the pin and the balloon, the real fear is that what's about to happen is the whole thing goes pear-shaped. What do you think? Where are we at the moment?
First, Richard, thanks for having me. I think your motto should be "Quest is the best." But the fact is, I sure hope you don't expect me to make any of those sounds you've been making. I just don't have that in me. The reality is a little like Ms. Wood had to say. I wouldn't kind of put it the way she put it, but markets pre-price all widely known things pretty efficiently. The fact is, this is not at all a bubble. It just isn't. If it were a bubble, few people would be calling it a bubble. When it's really a bubble, most people are calling it an opportunity. Are valuations high? Yes. Is that predictive? No. Valuations have never been predictive. Statistically, that's just it's a wrong thing. You can actually look at that statistically in a lot of ways and see correctly the valuations don't tell you where the market's going over any time period that real human beings care about. The fact is that valuations are high. Mm-hmm. These companies are spending a lot of money. Something like NVIDIA may do better than people think or worse than people think. It may suffer in a bear market. Oh, big deal. Hope for a surprise for that. But, oh, by the way, the fact of the matter is it'll still be the leading semiconductor company in the world. And in a real bubble, right, companies like that mostly go away and disappear.
The difficulty, of course, is what to do, because these particular stocks have been such a significant form of wealth creation that if they take a minor tumble, a lot of people will feel the pain from that. Now, I guess that's just inevitable. That's what happens with markets.
Did anyone ever know that stocks were volatile? Geesh, who would know? I mean, the fact of the matter is stocks bounce around a whole lot. Anybody that thinks that they don't or shouldn't is just kind of barking up a wrong tree. Stocks do great in the long term. In the long term, they reflect all of the improvement in technology, know-how, and innovation that comes out of the world, most of which comes out of America, by the way. But be that as it may, in the short term, stocks just bounce around a lot. I wouldn't get too excited, for example, one way or the other, although most people will, about the NVIDIA earnings call, because one quarter, earnings are looking backwards, not forwards, don't really tell you what the head.
So what does the wise investor do? First of all, if you've now found yourself overweight on tech, which is not, I mean, it's justifiable at one level because it is such an important generator of wealth. But if you are now overweight in tech, what do you do?
So, first, if you believe you're overweight in tech and you aren't rationally optimistic with that being a planful bet, well, then you can correct that. But the fact of the matter is, uh, even if you're underweight in tech, you probably got a lot of tech because tech is just the biggest weight in the world. If you think about the rational way to think, in my view, stocks basically weigh earnings over the next approximate 3 to 30 months, and you think about this as an intermediate to long-term reality, and you say, where do you want to be? The real question is, and you said this before, Richard, very correctly, is there a bear market ahead in the next 3 to 30 months? Is there a bear market ahead in the next few years? If there is, these stocks will go down. If there isn't, they'll go up. Will they lead or lag the market? Well, that's another thing to debate. That's whether you should be overweight or not. But the fact is, you take NVIDIA. It's already previously announced. It's got over $500 billion of actual
Right.
contract Blackwell and Rubin revenue, meaning that's just the data center revenue
I,
stuff that's associated with their data center GPUs. Over, between now and 2020, the end of 2026, that's gargantuan. But there still could be bumpy along the way.
Sure,
Bumpy
but
is normal.
I guess what distresses some, I'd put myself in this category, is the lack of policy certainty. Certainly in the United States, when we've got tariffs, we've got changing tariffs, all of which does take its toll on the psyche, if not the reality.
You know, um, Donald Trump is like a Texas tornado where I'm from of razor blades. It just whirling. Oh, I almost made some of your funny sounds there for a second. It's just cutting up and chasing around and scaring. And when we move into the midterms next year, that'll freak out a lot of people too, because normally that implies a risk of potential policy change. But is that really new in the history of America to have concern about policy change, to have strange things up? Donald Trump is very unusual, that's for sure. But the reality is concerns
Right.
about policy, that's not new.
If you take a look at, and I know you do review what your investors, what your clients are saying, you're very good at having your finger on the pulse of what your clients' concerns are. What is their number one concern at the moment?
You've already articulated there's a huge concern that there's a tech and AI bubble. I'm just going to tell you, if it were really a tech and AI bubble, there'd be very few people thinking it was a bubble. Most would be thinking it was an opportunity. That's the biggest single concern I hear.
And we are grateful, sir. Next time we'll send you some balloons and we can blow them up together. Thank you. Have a lovely evening. I'm grateful for it, as always, Ken. It's always so good to have your wisdom on the program.
Great to be with you, Richard. Thank you.